Joining us now is Scott Close of the EMX Royalty. Good to see you, Scott.
Thank you for having me.
Tell us about the business model at EMX Royalty.
Yeah, we subscribe to a different business model than the conventional royalty business model. So the conventional royalty business model is simply to write big checks to buy royalties and oftentimes take on substantial debt in order to do so. We primarily use prospect generation as the vehicle to build our royalty portfolio, and let me explain that. We go out and acquire the prospective mineral real estate around the world, do some basic inexpensive explorations on those properties to add value to those, and then partner those properties off. So when we sell that property off to our partners, then we hold back a royalty on that property. And and then we also collect annual payments on the property, milestone payments on the properties, management fees on the properties if we're managing the exploration for our partners, and so on. So that's our primary vehicle for growing our royalty portfolio, and we've been doing that since December of 2003. We also augment our organically derived royalty portfolio with royalty acquisitions when we can find those at favorable pricing valuations. But to be frank with you, that's become quite difficult. And then the third leg of our business model is strategic investment. So if we find a company that we think is largely under-recognized in the marketplace that holds an asset in there that we think stands a substantial chance of producing a very outsized return, we may invest directly into that. And a great example of that would be our Melmish transaction, and that started about 8.5 years ago when we started investing in a project in Far East Russia. And over the course of 7 years, we invested $13 million in the controlling company of that project.
Okay.
A year and a half ago, we were able to facilitate the sale of that property, and that property sold for $200 million, and that dropped $90 million into our treasury.
Nice. And if you don't know, the stock's been doing very nicely.
It has.
So I noticed that your assets, and you alluded to it there in Russia, assets and royalties are really sort of far-flung around the world.
That's right.
Is that difficult to manage, or you've got it down pat?
No, that's not very hard to manage at all, because a lot of those assets are in the hands of our partners. We've already partnered those off. Mm-hmm. And so once we partner those properties off, we really don't have much to manage there, and we don't have any checks to write on those either.
No, and you get a nice stream coming in.
That's right.
Exactly. So how would you say that your company is similar and or different from the Sandstorm Golds of the world, the Franco-Nevadas, who are sort of somewhat similar, but your model is a bit different?
Yeah, so Franco utilizes sort of the traditional business model, and obviously they've been very successful at that, of writing checks and perhaps borrowing money to acquire new assets. So we're really the only ones that are utilizing prospect generation to largely build the portfolio like that. And we're strictly royalties at this point, so we're not engaged in any streaming at all.
Okay. And lastly, what are some of the big developments that we can expect from EMX Royalty in 2020? Okay,
so there's probably 4 things I'd like to discuss here. So one of the things that investors should understand is that we have a 0.5% net smelter royalty on the giant Timok deposit in Serbia that Zijin Mining out of China is advancing right now. And what people don't seem to understand there is Timok is going to be the next Grosberg or the next Bingham Canyon. This is a multi-generational mine. They will be mining this in an excess of a century, and we have a royalty on that. That's number one.
Okay.
Number 2 would be our Balya property, our Balya royalty property in Western Turkey. We've had that property in our portfolio for a number of years. That had been in a relatively low state of production for a brief time by the company that held that. Recently, that company sold that to their next door neighbors, who has a 5,000 ton per day mill. And that company, İHSAN, a private Turkish company, will be advancing that property into a substantially higher state of production. We think that's going to turn into a very handsome ATM for us here within about 2 years. Moving on to the Carlin Trend in Nevada, we have the Leeville royalty there, which encompasses portions of the Leeville, Turf, and East Carlin mines. Since we've owned that property since August of 2012, that's provided us with about 13.5 million US in revenues. And Newmont, in the Newmont-Barrick joint venture, has recently come out with an analyst presentation where they say that they have recognized about an additional 10 million ounces of gold mineralization, which is squarely on our royalty footprint.
And and the fourth one you were going to mention?
That would be the Rawhide property in western Nevada. That is a gold copper producing mine right now. It's actually structured as a limited liability company. We have about a 1/3 equity stake in that. We think that our investment there will be amortized out in about 3 years, and then after that will provide us with several $1 million a year in revenue.
All right, thanks for the update, Scott.
You're welcome. It's great to be here.
Great stuff. Scott Close, EMX Royalty.